Good morning, everybody. It's Thursday, June 6th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Quickly here, overnight markets had July corn up 5 at 444 and a quarter. July soybeans were up 7 3/4 at 1185, and July Chicago wheat was up 4 1/4 at 651. This morning we had weekly export sales. Another real solid week for corn. Almost 1.2 million, 1.18 for 23, 113,300 for 24. Soybeans on the disappointing side, 189,600 for 23 and just over 73,000 for 24. Wheat had a net cancellation of negative 229,000 for 23. 616,900 for 24. That 24 number was on the upper end of the estimates, and meal sales came back at 250,200. We also had an export sales announcement of 152,000 corn to unknown destinations for the 23 crop year. Outside market news, the European Central Bank this morning cut rates for the first time since 2019. They cut it 25 basis points to 3.75%. That's obviously then down from 4%. Good morning, everybody. Like I said, lots in the way of data here this morning that we've been digesting. We were talking before the show. It still appears with another strong week of corn sales that we've broke into demand. We found some demand down there. So really good to see on that front. Weather looks non-threatening to this point. We've got kind of a drying period, and that's really, where we sit. So, Dustin, maybe a few thoughts to kick us off here this morning, and then we'll work her around the room.
Yeah, thanks, Dan. Yes, kind of the narrative, we have become competitive. From the last time we were at these futures prices, Ukrainian values were much cheaper than they are today. So we're seeing, obviously sales like we saw to Spain, and just continuing to see good demand. Justin said it perfectly. It doesn't necessarily mean the market, rises because of demand. We might continue to fall into more demand. But we still see a tightening with that extra demand. At this point in the season, we've sold about 470 million bushels more for the 23-24 season than we did the year prior. And I think there's something to be said about that. When you've got a lot of the move happening from momentum and hedge fund selling, and a lot of it's paper, and you see some kind of follow through on the actual physical demand side. It's kind of a good sign that maybe the market's getting pushed a little too far.
Yeah, no, that's good stuff. Ben, couple thoughts on your side from the East here this morning.
We did see on the break, we saw vol firm up just a little. I'm not vol, basis firm up just a little bit over here. That means that they're still looking for corn. I don't think it's going to be difficult to source. I don't think it's a runaway by any means. But same kind of narrative as Dustin. We seem to be very healthy when we break. We find good demand. We still, this is today's or tomorrow starts the roll, I believe. So natural pressure into that, yet the spreads haven't at all cooperated with the break. So, just a lot of humility going into the next 3, 4, 5 weeks. We've discussed a lot of things come together towards the end of the month. I don't have a lot of conviction over WASDE report next week, but I think that when you get to July options expiration, you get that peak into pollination weather, and you see what that acreage report brings at the end of the month. I think that gives you a lot clearer picture of corn, and I'm not sure why. Outside of, absolutely perfect weather, there's a reason to pile drive corn from here. Doesn't mean it won't happen, but I think there's enough uncertainty still that this was a good break, and there's some things telling you that that it's being met in the right way.
Yeah, I just add that, I think the market tends to change its opinions on the fundamentals based on price action. And so when you see a break like this, you get calls about having to sell it. So I think there's certainly a fear that has happened from the lack of selling last year, and we've talked about this a lot. The pain that a lot of growers had to go through this fall for renewals and this spring. So I think there's been way more aggressive selling than we've seen in a while. The narrative actually is interesting on social media that the farmer hasn't sold anything, and that's, I think, the opposite. And in the meanwhile, we've seen on this breaking into demand, and we've seen basis kind of invert. The cash markets, invert, going into a role where for the last couple of years, or at least a year and a half, we've seen spreads get ultra wide going into first notice day. So I think that's gonna be a really interesting time to see how all this happens with options expiration. Got some major reports coming up: funds, big shorts, farmer selling into demand. See what happens here the next. I mean, really, it's probably the next 2-3 weeks is gonna be big. So obviously, it's a bigger sell off than we anticipated. I know myself for sure. I didn't have a 40-cent break in my cards for the last week, but we'll see what happens from here. We're feels like they want to try to go make contract lows, just the way it's acting. But we'll see if they get away with it. We keep breaking into demand, and we're up a nickel overnight. We'll see if we can kind of get any footing here.
Yeah, and continued build in open interest too, right? I mean, we were up another 20,000 there yesterday. So
yeah.
Yeah, let's talk about that a little bit, because I think that's also another sign of just, we'll have to wait for the COT report for confirmation of this. But I do think position building has been obvious on the way down. People have been adding fresh shorts, and whether that's managed money and or farmers, or I think they're probably, moving in unison. I do think that creates a bit of a tinderbox. If everyone says, okay, I'm not going to get caught again, not selling enough grain into the spring, if that was the narrative last year, and then we go into this year and they say, well, I just sold a bunch of corn in the lower fours, I can get 470, 480 new crop corn. And then you get into July with any sort of adverse weather, all of those sales, any double ups that might be associated to them for accumulators, instead of an asset that turns into a liability for a lower yield scenario, even 5% below trend, I think that can create a tinderbox to the market. So I think there's a little bit extra volatility that would actually come if we did break 5 for some weather reason, just with all that open interest that just grew.
Yep. And I think, too, like when you look at, profitability for growers, we're probably at the worst price point right here. Kind of this 450 to 460 type area, because you're at that gap, right? And we talk a lot about this with clients, like the gap between crop insurance and profitability. So you're kind of at a pain level, and then when people panic, when you're in these areas, it can create a lot of problems, because you kind of work yourself into where you can't be profitable, right? You're forcing yourself to sell it where you really can't make money no matter what happens. And that doesn't mean that corn's not going to $3.50 or $3 or something. It doesn't mean that. It just means, like, for today's date, you have no idea what your yield is. So to go just sell it because of a chart it can be dangerous if you don't know what the outcomes mean. To your point,
I'd say, Justin, would you agree? I mean, getting a handle on this crop, I mean, we've always talked about, there are growers that walk fields and are in there and really get, their expected yield expectations really dialed in throughout the season. And then there's a group that, maybe just kind of accepts what Mother Nature gives them and sees what we get at the end. But like, I'll argue that this year, with margins the way they are in this area that you're talking about, with this Plan B type area, I mean, getting a handle early on of what this prospects are could be the difference between a margin and non-margin.
Yeah, it's so tough, as you know. Yeah, we've clients that really work, walk a lot of fields, really try to get that narrowed in. But even knowing your own fields, obviously it's hard this time. I mean, this time of year, it's this tall and green. So yeah, it looks good and there's moisture. So it's tough. But to your point, it's always important try to get the best idea you can, because if you can start taking off like, hey, I've got enough moisture that I'm not going to have a disaster, or you start kind of chipping away at what those, the yield expectations to start the year, like on our farm, could be 150 to 300. So as you get more and more knowledge, you start narrowing down that range, and that's where you change your marketing strategy a bit, right? As you get more confidence in what that range is. Like for instance, now, like 150 is probably off the table for us. We have enough moisture, like it's not going to be a disaster. Like it could, I could eat those words here in 60 days because it never rains again and all blows over or something. But I think right now, though, people are instead focusing on the market's gone down, I can't miss out. If it's going to 4, I have to be sold. So I think the market's really good at getting panic, and we tend to see more farmers selling on breaks than rallies, unfortunately. So like the market action, you get a lot more calls when the market breaks 30 or 40 cents than when it rallies to sell.
It was funny. Nick just chimed in from over in Indiana. So there's two methods of yield estimates. The WAG method is wild ass guess, and the swag method, the scientific wild ass guess. Your point's well taken there, Nick.
Yeah,
we'll go for the scientific one, I suppose.
Well, that's what's so funny about how hard some of our clients work at getting their own yields, and they've got 20, 30, 40, 50 years of experience with that field, and it's still hard. And then you have, all these analysts from the US fine tuning Brazilian crop.
Right.
Yeah. So that's what's so hard about that. So
it sure is. Rylan, we got a couple minutes before we come into the open here. Boy, I wish one of these days I could get some positive news in your sector, but another dairy herd in Iowa confirmed with bird flu, bringing us up to 10 states now that have been infected. I guess some thoughts there on what they're talking about in the industry.
It just seems like more of the same, really. I think more and more of these cases are going to keep on coming up. It's just a matter of right now you've got a little, you cooled the sentiment, I think, a little bit that this was going to directly impact the beef supply just because USDA is testing for it in meat, So I think that it's sort of on the back burner right now, but we are kind of a little bit of an uphill battle with the cash market right now. I think the anticipation has been just a little bit on the weaker side this week, even with beef prices, staying pretty strong here overall, but it since has started to kind of falter, after we saw the peak kind of last week. So I think you've just got a little bit more concern on that front. You're kind of in this roll period right now where I think you're just seeing some money move around, and you're just seeing a little bit of liquidation out of the front end of the market. And possibly just a little bit more security in the back end. We did see open interest jump about 1,300 contracts, and most of that was in the October. So it just feels like the optimism is just getting pushed and further and further out, just as there's a little bit more uncertainty from a supply standpoint, I think, back there, and that's why you got the premium. So, yeah, you've had that case. You had, another story about a fatal case of H5N2 in Mexico. I don't think it's really going to have any real bearing, at least that particular issue, overall on the cash side of the market. It seems like the futures, we typically see a bit of a risk-off situation develop, but we rallied pretty hard. We rallied pretty hard the last time, So it's still just going to come down to demand, I think, in the end. Once we start seeing how things shape up. I think just with the maybe warmer and drier pattern, there's a little bit more optimism here, I think, on the beef side of things. Hog market's a different story. You've just seen a massive collapse. You're at the lowest level for August since January. You're knocking on the door at contract lows. Managed money has done nothing but liquidate. They were carrying a near record position, and now they have since been exiting, and there really wasn't a good reason that anyone could see why they were carrying such a long position outside of maybe playing some potential seasonal. So, we've seen them really start to get out of this market, probably even moving to a short position at this point. It just seems like you're seeing cutout prices lose. You haven't seen any seasonal appreciation in cash, and weights were quite a bit above the previous week at 290.4 versus 288. So we got plenty of meat right now on the hog side of things, and hopefully we can see this thing just start to find some support. It just has not seen that for weeks.
I appreciate the update. Ben, a few words here today as we celebrate D-Day. I say celebrate, but commemorate. Maybe just a few thoughts and words from your side.
80 years ago, we had a lot of brave people. And I would encourage anyone to go to YouTube and listen to Eisenhower's speech to the troops before they left. And, men from the ages of probably as young as 16, 17 that went in early all the way up to 40 plus. Making a huge sacrifice to free Europe from tyranny. And in Eisenhower's words, to freedom-loving men and women, or free men and women everywhere, and liberty-loving people. And I think it set a huge tone for some of the great advantages that we've had establishing America as a world power. And it's something that, as an American, I'm super proud of what we did, because we were on the right side of history there.
Yeah, amen. That's good stuff, man. Couple of housekeeping items here. Tomorrow's Friday. We'll have Brian with Fun Fact Friday. So I'm sure he'll have something to take us into the weekend with, which will be good. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good conversation. Hope everybody has a great day. We look forward to talking to you tomorrow.